What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, welcome back to Real Estate Investing Demystified.
Absolutely, yeah. We've been hard at work kind of renewing our studio. We have this great background. Right. It's just your face. That's all it is. Not my optional. But we're doing our best. We're doing our best to get things going for our podcast, for our viewers and listeners, using the best mics we can, going back and forth between Vancouver and Naples. So doing our best, what we can do. But
August is all about the tech.
Following on doing our best and following on tech, we have a very interesting guest today. Somebody I've personally been watching her journey in this business of fintech, in the business of crowdfunding. We're very excited having our guest on the show today.
And she's accomplished some incredible things.
Absolutely.
Being a young woman.
But giving a quick background on that, like a firm like ours, a real estate investment firm, we go out there and we source these deals, but we end up with a problem. We don't have enough equity to close on these deals. That's why we offer it to the members of the public, offer it to investors. Historically, these investments were only available for people that the investment group knew. They couldn't go and advertise these things publicly. Right. In the US, after the Jobs Act, I think 2012, 2013, a legislation came out which allowed people to go and publicly advertise it. Yes. I believe there was a similar thing in Canada, which was the Northwest exemption, which only certain exempt market dealers could offer these deals. But now Canadian issuers or Canadian investment firms can also offer these deals publicly. But now, if you are an investor looking for a deal, you're limited to the number of sponsors or these investment groups that exist. You're limited to those number of people you know. What if you want to diversify? What if you want to have multiple options? What if you want to invest outside of just, let's say, asset class that we focus on, multifamily? What if you want to invest into, debt as a debt instrument? What if you want to invest in multifamily or industrial? Well, or development. That's what our guest today has been able to achieve, is creating a platform where investors can go on to and invest into these vetted investment opportunities that the platform has. But why don't you tell our viewers and listeners a little bit background about our guest, and you can start the show.
I would love to. Awesome. Today we are joined by Khushboo Jha, founder and CEO of BuyProperly, an award-winning AI-powered platform revolutionizing access to alternative investments like real estate. Recognized globally, BuyProperly simplifies investing with lower minimums and tailored education for users. Now, Khushboo, named Woman of the Year by Bay Street Bull and DMZ, brings 15 years of experience from Amazon and top consultancies. She holds an MBA from Wharton and a degree from IIT Kharagpur. So welcome, Khushboo.
Welcome, Khushboo.
Thank you. Thank you so much for having me.
Yeah, thanks for taking the time to be on our show. Khushboo, let's get started. What is BuyProperly?
It's a platform for investing in private markets. So private markets being private equity, commercial real estate, private credit. These are asset classes that retail investors cannot invest in. And that's everybody from an intern at 20 years of age to people who have almost up to 5 million in investable assets, because typically wealth advisors stay away from alternative, especially private alternatives, because they're not liquid and they don't know how to navigate that space, etc. And so the platform simplifies that access by not just getting the deals, but also making sure that the cost of taking a small check into a deal is sustainable. So that's what the platform does.
That makes sense. And differentiating as well, when you talked about wealth advisors or financial advisors, they're hyper focused on, deals on their shelf, which is pushed by Wall Street. The historic kind of stocks, bonds portfolio. Rarely do you see them coming into the space of for example, syndications or multifamily or real estate type of deals, development deals. Yeah, so that's why you don't see a lot of wealth advisors kind of in this space. But it's great to hear to that. Yeah, please.
Yeah, yeah. Khushboo, I always like to kind of go a little bit back. And how did the idea of starting BuyProperly come about for you?
To be honest, it came from my own problem. I used to work in tech. I was at Amazon. And at some point, more than 60% of my compensation was stocks. So all my bonuses, everything, all my promotions, they just kept growing in the stock value. And they're great stocks. So no complaints about that one. They're great stocks to hold. But again, I felt like my entire net worth was sitting at the mercy of Wall Street. Or public markets. And if the stock market crashed, like I had seen when I was starting out my job in 2007-8, when I had seen a big tanking, I was worried that I'll lose everything. And so I was like, okay, what can I do? So I went and bought an investment property, and that was just too much work. And I wasn't sure I want to do more mortgages and more condo units and so on by myself. And I was like, there has to be a better way of doing this. Mm-hmm. And so I searched and I came across the whole crowdfunding concept. I was like, okay, yeah, let's see what's there in Canada. And I couldn't find anything. And I was like, I want to be able to invest in private equity and private credit and all of the fancy stuff that I have read about at business school to have a diversified portfolio. And because it didn't exist, I was like, well, maybe I can build one. But then I was like, I'm pretty risk averse. So I didn't jump in. I was like, okay, I have this great idea. Let's do this. I went and spoke to at least 200-300 people to say, am I the only one who wants to invest in these things? And there's nobody, and what if nobody else wants to do this? And I realized I had about 200 people sign up to say, okay, yeah, you have a product, send it to me. I'm interested. Okay. And I didn't have anything. It was just me trying to, then I went and said okay, if there is demand, why isn't anybody doing it? That brings us to regulations. You refer to Jobs Act, and there are prospectus exemptions in Canada, which after Jobs Act, both those countries now have that opportunity to create it. The problem still is the cost. So yes, the regulation makes it possible. So now it's real, somebody can do it. But if you were raising capital, and you guys raise capital all the time, you would know if people were writing you $1,000 checks, is it worth the time and the cost and the compliance and the governance to take that $1,000 check? Most of the time, the answer is no. The unit economics doesn't work. So there's a demand, but unit economics doesn't work, which means incentives aren't aligned, even if regulations allow it. And coming from an Amazon background, I was like, maybe the hypothesis is that technology can make the whole process efficient enough that the marginal cost of taking a small check goes down. And that was the core assumption with which we started to say, over time, we will automate, simplify, and lower the cost of each part of this value chain, connecting people who want to invest to people who want to deploy capital and grow like you guys.
Yeah,
that's how we started.
I think that's brilliant how she went out and asked 200-300 people at first to make sure there was enough interest in order to get things going.
Aside from market research, prior to that date, have you started any other companies? Were you involved in startups? Talk to us about that journey, because it's pretty complicated. You're dealing with VC investors, early angel investors, kind of first round, second round. It's a pretty complicated world. Were you just jumped in feet first, or tell us about your journey in that startup world?
Well, I wish the answer was saying, no, I already knew everything. I did jump in feet first, but I did my market research. I knew I could make it happen. And that came from the Amazon experience, because while I was there, I had launched 2 business lines from them from scratch. And Amazon is very frugal. Only people in Amazon can understand that a big tech company can be that frugal. So when you launch a new business within the company also, you get your salary, of course, so you're not like a founder, but that's the end of the story. So you don't get resources. You get resources in proportion of the size, which is 0 when you start. So getting resources like engineering, marketing is close to impossible. And then you have to build your presence within the Amazon marketplace. So when I launched a business line, which was a used electronics business line, nobody used to go to my page, even though I was on the Amazon page. I had 4 visitors, which was basically just me going 4 times a day to that page. And I had to figure out how to drive traffic, how to have this coded, how to figure out the marketing, how to get the word out. I had to find like this was a used electronics business. So I had to find a third party refurbisher in Kentucky who could refurbish all electronics for me. So I figured out the entire end-to-end supply chain, pricing algorithm, marketing, and everything. And I'd done that 2 times at Amazon. First for the used electronics business that I launched for US, and then I took it all over Europe. So country by country, I went to France, Germany, Spain, UK, and Europe is every country is a different regulation. So it's not one country. And so you have to deal them one by one. And so that's what I had done. And then the second business was a hazardous materials business. Nothing dangerous. It was just things like perfumes. They actually have alcohol in them. And so they are flammable, which means there's a lot of regulation around how you handle them, transport them, label them, how you store them, the building, everything is different than the regular stuff. And so that was another business line that I had done for Amazon. So I was kind of used to, for both of those businesses, dealing with compliance and legal across a multitude of geographies, because they were both multi-country launches. So I knew how regulations work, how often they would differ in various countries. Most times they differed in the language or choices, but in the spirit, they were designed to protect common people. And so in the spirit, they would be the same, the logic would be the same with nuances. And so I think that was my past experience. And a lot of that I distilled when we were building the platform to make it multi-country.
Sure. So you had the experience, you had the background, but did you have any coaches or advisors, particularly in the startup business in fintech?
Not really. Not when I started.
Okay. Okay. And the vision early on was to was it focused on real estate, or wanted to be multi-asset class on the platform?
It was always intended to be multi-asset class, because I started from saying, where would I want to put my money? And the answer wasn't, I'll put it all in real estate. The answer was to say, I want to just grow my money in a diversified, safe way. And normally that would include more asset classes. So it was designed to be like that.
Sure, fair enough. And was it focused in Canada? Did you realize there was an issue in Canada? What year did you guys start? Because by 2014, I think 15, there was already crowdfunding platforms in the US. What year did you guys start?
So we started working on this in 2019. We launched in 2020.
2020. Okay. So by that time, there was already platforms in the US. So was your focus market Canada when you started?
When we started with Canada.
Got it. And now you're both in Canada and the US, kind of offering the deals you offer. I've been part of your email list now for many years.
That's right.
But let's continue the conversation. So talk to us about one of your first deals that you guys ended up having on your platform. And sorry, I'm stealing some of your questions, Ava.
No, you're okay.
So our first deal was it was a very small residential unit, something we were sure we can close in time, move on, do quickly. And we'd already by that time built a lot of due diligence models, AI models. And coming from that background, that was the easy part. Like build an AI model that reads up all of the MLS data, looks at all the macroeconomic data, GDP, income, vacancy, everything, put that all together and identify mispriced assets. Same thing as an hedge fund or any asset manager does, like what's mispriced in the market. And so we found a unit. We went live with that deal on April 1st, 2020, which was 2 weeks after the shutdown. And so we had gone remote. We had to close this unit. We were not allowed into units. There's a lot of restriction, and we're like, what did we just get ourselves into? Maybe this is not the best of timings for a thing, even if it's a good idea. But then we actually just exited that condo after 5 years, and we returned 1.75x in about 4 years.
Nice. And Khushboo, when you started, actually, I think it was Yahoo Finance. We were both featured in the same article on Yahoo Finance, and we learned about BuyProperly. But when you first started talking about this unit, you were kind of the issuer yourself, correct? Like you were the one that found the deal. And then when was it that you started partnering with other issuers on your platform?
After our first 5-6 deals, because again, it was about, as a startup, we were also proving ourselves, proving the tech model works in this market. And the easiest way to do that was to do it ourselves as an issuer. Funds didn't want us. I mean, Carlyle wasn't wanting to give us one of their funds to list on the platform. And so it was more saying this model of syndicating investors completely online, doing their KYC and end-to-end management works and works well. And the results speak for themselves, because this property was like doing distributions for 5 years and then returned 1.75x of the initial capital at the exit, in addition to the distribution. So the total return's been significant on that one.
Incredible.
We want to take the kind of journey of an investor coming through your platform, and we want to take the journey of a deal coming through your platform. I'll do the deal, Ava will do the investor.
Yeah. Like, just walk us through the client journey on BuyProperly. They were learning about the platform through your marketing efforts. I really want the viewer that's watching this to understand how user-friendly your platform is, both for Canadians and US investors, please.
Yes. I mean, it did help that I was investing in both of those places, in any platform that remotely looked like mine or was in the same space. So I have my money in all players in the space, my personal money. When we started out, we wanted it to be as low touch for end customer as possible. Going by just Amazon experience, we knew where all drop-offs can happen. We were trying to minimize the friction of the investor. We wanted it to be real-time, like a Robinhood or a Wealthsimple, and that was the goal. We weren't allowed by Securities Commission. That's a different story. We were asked to stay not real-time. If an investor comes to a platform, sort of like any marketplace, you browse through what's available. Say you like one, you're like, this is interesting. Let me find out more. Obviously, you can't invest without creating a profile. So you create an account, you complete your profile information. So we would collect all of the information from a financial services perspective. So your demographic information, also your risk information, because we are at the back end, we have a suitability engine. We are checking for whether or not you should be investing in this. So we will do all of the checks and balances there. So risk, your income profile, your personal profile, your investing goals and horizons, and other standard information. So you fill out everything.
Is that considered KYC?
KYC, AML, photo ID check, and suitability.
And is that? And are you guys the in the US they call it broker dealer, in Canada they call it exempt market dealer? Are you the kind of exempt market dealer for a lot of issuers? A lot of investment firms have their own exempt market dealer shop in-house. We don't, but are you guys your own exempt market dealer? Do you utilize a third party? How does that work?
We have a partnership for that. So we ourselves as a company don't own the license, but we have almost in-house equivalent partnership with somebody who does.
And does that EMD, does that exempt market dealer, or in the US is called broker dealer, do they have access to the investor's journey on your platform? They can see that, and if there is any red flag or any issues, they jump in. Like, talk to us about that part of it.
Yes. So as an investor, you're filling all of this out. When you try and invest, we run a whole bunch of checks. We will make sure your information is correct. This is before even the broker dealer sees it. Because if you're a fraud, you're not even wasting the broker dealer's time. So when you try and invest and say you put in 10,000 and I want to invest 10,000, we will run a KYC check, a photo ID, an email, and suitability. We have a bunch of AI ML flags to say this information is consistent, not consistent, and therefore we'll park it and not go forward. If everything checks out, that's when the broker dealer comes in and gets involved. So when they come in at that point, they get the outcome. So they know that the person has cleared this, this, and this, and here are the issues, or everything is clear. Both of those scenarios. And you can sign documents on the fly. Broker dealers or exempt market dealers have their own portal from where they can monitor, override, take action, reach out to the investor real time as well as post facto. So they have their own portal, which is where they can track every bit of this.
Nice. And then the investors can really log in and see their the performance of their investments on their investor portal, which would be BuyProperly.
Got it. And a quick question before we go to the next question is also this term crowdfunding is part of the lexicon of finance kind of conversation, but it gets confusing sometimes. It's used as basically a platform or a process to raise money from everyone, but it's also an exemption in Canada, which is called crowdfunding. Can you distinguish those two and talk about that a bit more?
Absolutely. That's a very, very valid point, and it's something people confuse all the time. So crowdfunding is a specific type of consolidation, both in US and in Canada. Within crowdfunding, there's a max. So in Canada, you cannot take more than 2,500. In US, you cannot take more than 10% of the.
And sorry, 2,500 per investor, not 2,500 per deal. Just want to clarify that.
Yes, per investor per deal. And there's a yearly annual 12-month rolling max as well. So you cannot take more than 10,000 max from a person ever, sort of thing, across everything.
Got it. How about on a deal level? How big can the deal be?
Deal can be anything, but you cannot take more than 2,500.
Got it.
It was 1,500 in the past. So then if you are doing like a 15 million deal, you're dealing with a lot of people.
Yes.
We on the platform aren't specifically crowdfunding. We are putting together anything. So you could be writing $1 million check or a $10 million check and it is still work. So crowdfunding is different from other exemptions in the sense that it has the least amount of reporting requirements. And therefore there's a cap. Because to raise money under crowdfunding, I as an issuer, so if you were raising capital, you have to tell me maybe just a PowerPoint will do. But then that also means you cannot take more than a certain amount of money because you've not disclosed enough risks and enough information to me to be able to make good judgment decisions. And so it's kind of like the idea is it makes it easy for you to raise capital, but it also protects me from losing money. What we do as a platform supporting crowdfunding will be like a small subset. Most of our deals are not crowdfunding deals. They are offering circular or offering memorandum. In US, it's offering circular. It's in Canada, it's called offering memorandum. It's a prospectus exemption, which means there's no prospectus. But the corresponding alternative document that we have is pretty comprehensive. So it's short of an IPO, but it has extensive risk disclosures, market risk assessment included as part of the investment deal, which allows people to make a better judgment of whether or not to give you money, which means those crowdfunding caps wouldn't apply because we are providing much more documentation. And that was one of the things we did. We actually templatized and automated creation of that. So we create those through code, which was one of the ways we've reduced the total cost was templatization and automation. So a lot of things that you would need to go to create like a comprehensive document can be just put together with basic information within the system.
Got it. So Khushboo, what is the minimum investment an investor can invest on your platform right now?
Well, it is set up as 2,500. But it could
and then it could be anything, right? And then depending on the issuers that you partner with, what their minimum investments are and so forth, right? Now your investment platform, it caters to investors, but it also caters to general partners and serves investment firms such as our firm here, like CPI Capital. I had a meeting with you and you really walked me through all the features of your platform for general partners.
Yes.
And I must say that you did a spectacular job at hitting all the nails on the head when it comes to, you did a spectacular job hitting all the nails on the head when it comes to all the features that general partners are looking for, particularly for general partners who focus on both Canadian and US investors, because it's very, very hard to find investment platforms that caters to both sides of the borders. So Khushboo, your investment platform, it caters to investors, but it also caters to firms like ours at CPI Capital who are general partners. You and I had a meeting recently and you actually walked me through all the features that BuyProperly has. And I must say that you really did a spectacular job hitting all the nails on the head when it came to providing groups like ours with everything that we need in an investment platform. More precisely, fund managers who cater to both, who partner with both Canadian and US investors. Us doing lots of research out there, obviously it's very difficult to find an investment platform, and you and I discussed this, that does cater to both Canadian and US investors. So, I'm just kind of speaking for you, but because you've been through the process as an issuer, that's really how you were able to build out such an incredible platform, right? You knew pretty much all the pain points that existed for general partners, and you're like, I got to make sure all these points are in there.
That's exactly what happened. Yeah. We started out as an issuer, so a kind of eating your own dog food situation. We faced everything from issuing, from people saying, oh, I want to add my wife later on. Like, I want to check from my personal name to a corporate name. Can you just move it to the corporation? But you sign the document. So now it's like a new thing. Or like, oh, you remember the transaction I did last year? I am moving it to a trust fund. And so can you move it to my trust instead? A lot of these things in the life cycle of an investment, we were dealing with customers firsthand. And we were a small team with small resources, which means every time we encountered one of these issues, we said, okay, how do we automate this so it costs us less time and frustration next time? And that's kind of, so there was a core platform, but then we said, okay, how do we automate waterfall calculations? How do we automate when document errors happen? Do we need manual overrides at times? How will that work? And like bit by bit, the system became robust. I always like to say we build a cannon to kill a fly, kind of like. And we had overbuilt it, but it was largely working backwards from the customer. In fact, we have a lot of compliance things we check off. But when we started out, we weren't trying to be compliant, and which is why we built something. So for example, we were encrypting data, both in transit and when we stored it at rest. But that wasn't because we were trying to hit a certain compliance milestone. It was like that because we believe that that should be protected. It is sensitive data. There's no guarantees. We should overprotect it. And working backwards from all of the pain points is how we built it. And over time, it just became very friendly to every stakeholder because we were playing that role in every angle. I think I'm also thankful to a lot of our customers, especially like a lot of the Canadian customers, because we were one of the first platforms, and they're like, hey, have you looked at this? And have you looked at this? There's this platform in US and they use this, or there's this thing in Robinhood that I think will be handy to you. We used to get so much ideas from our customers to say, what about this one? Or I'm a product manager and I think these are some quick changes you could do to make it easier. And so one, we were working backwards and saying, fix every problem, automate every problem. Cross-border was a big one, US to Canada. Although it's less technical problem, more perception, mindset, all of those other problems than anything else. But then we built an infrastructure that's SOC 2 compliant. That's FINRA compliant, SEC compliant. So we're meeting all the broker-dealer requirements on both sides of the border, and as well as the cybersecurity requirements on both sides of the border. It was largely built to ensure that every stakeholder is having an easy time.
Got it. So you work with an EMD on this side, on the Canadian side, and then you work with a broker-dealer on the US side for the cybersecurity? Interesting. Got it. And then let's talk about a journey of an issuer. So an investment firm. I keep calling it an issuer, but that's more of a legal securities term. But we're really talking about an investment firm or somebody who's got a venture that they're looking for capital for. Talk to us about the due diligence and underwriting and analysis you do on these firms. So let's say there is a firm that's buys multifamily, like a CPI capital firm. And what is the process in your due diligence on that firm for you to give it the thumbs up to be on your shelf, on your platform, providing their investment to your audience, to your investors?
So there are three parts to any due diligence. One is we are from our end, and we use AI modeling for everything because that's the only way we can consume large amounts of data. We only have one or two financial analysts on the team, but we're doing robust due diligence still at scale, and we get a lot of inbound. So the three parts are, one is the macroeconomics. We are constantly, from our end, tracking trends and updates macroeconomics wise, which means tracking things like GDP per capita, vacancy rates in regions, per square foot prices, how they are trending, interest rate impact, all of those things. The market dynamics is something that we are consuming data and tracking. So we kind of have a sense of how things are trending or what are the things we would want to stay away from in the minimum. So it's like, okay, let's not put money in this, and this, because there'll always be assumptions, but at least we know the no deal scenarios, like this is out. Now once you have, say, for example, if Jacksonville is an area that we want to do, or Nashville is an area we want to do business in, and like, okay, this geography seems very promising. All the data it's not mature enough that we can't fight it, and it's not so early that we don't know. So area of interest is an industry of interest. So we're constantly running industry data as well. So if it's a multifamily, we know the area, we know the industry, and we are saying, okay, now the next level would be the sponsor level risk. So we have a modeling on the sponsor risks, and there's enough data out there, or at least some data out there of the past history to say what are the big drivers of any evaluating a sponsor risk and kind of give them a risk rating. We would not want to take on a deal that's very risky. We are too small a company to do anything and get away. We can't. Customer trust is like a hard-earned currency, and we cannot afford to lose it. So we're very, very careful. Even though we are a marketplace maker, we're very careful to not lose the trust. We want to be more like Amazon and not like Craigslist. So to protect ourselves, the second layer is the sponsor level risks, and we have a modeling for that on various elements that go at the sponsor level list. Then the third level will be the deal level. So you may be a great sponsor, it's a great geography, but that specific deal may not be well positioned because of a whole bunch of factors. Maybe there is an issue, maybe there's a legal thing, maybe they were growing cannabis before, who knows what is going to come up to you. But then there's a third level. If all of these check out, then we are evaluating the deals to say, okay, everything looks okay or within range. Because again, we're not buying it ourselves, and we want the customers or investors to make their own decision. We would want it to be within the band that says that this is not a fly-by-night deal, person, or city, stable, reliable, and then it can take its own course.
Nice. So Khushboo, how do you guys get compensated?
We are typically a platform because we are not a broker dealer. Our fees would be largely linked to the services we provide. So the due diligence, the listing, the ongoing customer management, because there's a whole bunch of little services. If the issuer wants us to take on accounting, then that's additional cost for that. So it depends on the services that we are helping provide both sides.
Okay, so issuers pay a fee, and also the users of the platform, the investors, pay a fee.
Yes.
Is the fee that the investors pay, is it a subscription type of fee, or is it a per investment type of fee they pay?
It's a per investment type of fee.
Got it. Another question for you, again, on that investor journey. If an investor is investing in a deal, and they let's say hypothetically they would have known that sponsor or that investment firm, and they could have invested directly with that investment firm, or they could come through you, do they get the same economics that depending on if they come through you or go directly to the investment firm, or do they get better economics coming through to you? Or talk to us about that aspect.
They'll get comparable economics. So we would make sure that irrespective of the channel that the investor uses, they get the same economics. A lot of them, especially if they're not a large investor, might choose to still do business, and the issuer would prefer they do business through us, because then they have access to a dashboard and portfolio view and all of that. But there's another thing, which is an alternate trading platform that we have. So we have a secondary marketplace. So if you had invested in a deal through our marketplace, you can actually list those unit shares for sale whenever you want to another peer. So you could just, and it's like as simple as clicking a sale button, like I'm ready to sell. Maybe you invested 100 grand and you want to take out only 20 grand. So you list 20 grand worth of shares back on the platform, open to all investors again, who can then buy it.
Is that active currently?
It's been active for 2 years.
Wow. So that right there, just for me to explain to some of our listeners and viewers, is creating liquidity in a historically illiquid industry, in a historically illiquid market. Yeah. So that's very interesting. Very interesting.
Yeah, that's awesome. Khushboo, this is a question I wanted to ask you. How would you approach building out BuyProperly if you were starting all over today? What would you do differently?
Well, when we started out, I think it was like I was saying earlier, feet first, just jumped in, passion. We started as the cool disruptor, AI powered and all of that stuff. I think over the years, I have more appreciation of the other side. So people who are actually building the buildings or doing stuff on the ground, and they can't even be on the laptop sort of a thing. So if I were to do this again, I would focus less on disruption, but more on bridging the gap between how much tech can do and where people are in the ecosystem in reality. I would probably build more bridges to make sure people who are not using technology as much as they could be, they are using more of it. Because we started as too cool.
And how about as far as you're having a crowdfunding platform relative to you being a sponsor of deals as well? Where is your focus and allocation of resources going these days? Do you see long-term that you will be doing both? Do you see focusing on one more?
They are interrelated. So if you ask us, we would be focusing more on the platform for the ecosystem. We are kind of like the operating system for this industry. We are not developers ourselves. So we will let the people who are best at that trade do their thing. What we are good at is creating that OS or operating system that brings people together to make this happen. And so that's going to be a lot of our brain power and mental power. But if you look at any marketplace, even if you look at Amazon, it's not the Amazon retail that makes money, it's AWS that makes money. But then the AWS was built from the learnings from what do you need to run a business and how robust the technology needs to be. And so it's kind of complementary for us to have the marketplace because, one, we have almost 30,000 investors there. So there are active investors on the platform that issuers can benefit from. And two, whatever we learn as trends, as behavior, as data about what investors are looking for, helps us make the platform better. So it feeds into each other, but where more of the work lies ahead is in the infrastructure so that more of the ecosystem can be tech-enabled and do more.
Amazing.
Great points.
Now, just to switch the conversation a little bit, talk to us about being a woman, an immigrant who was starting a startup in fintech, right? I mean, how difficult could that be? You mentioned that you didn't really have a coach. Did you have an advisor, early backer? Like, how did you manage all of this?
Rome was not built in a day and wasn't built by one person kind of a thing. So, of course, there are lots of advisors and supporters. A lot of my investors are big supporters. A lot of the people, other founders in the ecosystem who at various times have heard me out, helped me out, made introductions, whatever was required. So I have been very fortunate to have an army of supporters behind it. I think being a woman or minority or immigrant wasn't even something that I realized till I started doing a startup. I feel like it's like, if you want to make it happen, you figure it out. I mean, circumstances are what they are. And sometimes it's depressing to have to try harder. Sometimes when you're exhausted, you're like, I wish it were easier. But it's okay if you have clarity on your goal, you just figure things out. And when you have supporters like my ex-colleagues, my investor, the founders in the ecosystem who are writing me kind of blank checks of support to say, I'm here whenever, I'll just text and I will show up. Amazing. It makes it so much easier to do that.
Of course. Let's switch the conversation up a bit. I think we discussed BuyProperly already a lot. Well, before switching the conversation, where do you see BuyProperly over the next 5 or 10 years? What is the kind of division?
Well, we are hoping we can become sort of like the Intel of this ecosystem of private markets. Private market has a lot of retail wealth transfer that's going to happen. Private market would want a share of it. So this confluence of retail investors getting into private market is happening in a big way. It's happening now, and it will continue to happen for the next 5 to 10 years. And we would want to be a core player in that orchestration, while the big funds and the big bulge brackets, some of whom we've been talking to, are looking to enter the space in a big way. And we would just want to support everybody.
Interesting. All right, great. Let's switch the conversation a bit. So you touched on this a bit. A company was formed right around when COVID happened, and when COVID came around and really touched on what was happening with the market when it comes to equities, when it comes to real estate, when it comes to debt and lending market, which had an effect all over the place. We had massive inflation as a result of quantitative easing, as a result of central banks printing money to be able to save and send money to people so they don't have to go to work and be sick and get sick with COVID. And it had this seismic shift in the whole ecosystem of finance and real estate and everybody's day-to-day lives. Did you, aside from BuyProperly itself kind of having difficulties maybe in that stage being launched, any difficulties that any of your issuers have had over the years since COVID? Because again, interest rates started going up rapidly. The Fed started increasing rates to fight inflation. Any difficulties you can speak of as far as any issuers on your platform or any stories you can share?
So when we started in COVID, it was okay. Everybody knows 21 was cool, crazy. Everybody was doing lots of deals. And then the party was over. And I think that's where we saw, at least as far as issuers were concerned, we could see that sudden differentiation between higher risk issuers versus lower risk issuers. And lower risk issuers had taken insurance for the interest rates, and they were putting in a lot of safety measures, which meant that their promised IRRs did not look as attractive. Like they weren't saying you'll make 30% IRR. They're saying, oh, you will make 15 to 17 or like much lower. But then with the bad market, they were still projecting 15 to 17 and nothing changed. And so for us, it was almost like an awakening to realize that all of those extra layers of protection that some of these people were putting in was so valuable. I think there was one issuer that we were working with, hasn't gone down, but they haven't fared as well as we have projected. Most of the others, surprisingly and thankfully for us, have stayed stable, largely because we were extra conservative. Like, because we were like, if we don't know and we're not dealing with people we know and they don't know us, let's just look at data. So we could be more objective. It wasn't because we liked somebody. Like, data works, let's go with that person. Data doesn't work, it doesn't even matter. How will we justify it to this? It had and COVID meant we were not meeting in person. We were not doing any lunches. We were not going to any holiday parties. Those weren't things. You met somebody on Zoom, you got an Excel, you looked at numbers. That kept us more objective. And where we didn't get numbers, we didn't go for. But definitely the market's been very hard in 23, even for the best of folks. That's just external macroeconomics. Now we are beginning to see a little bit of a softening and a little bit of cheer coming back and saying things are not all that bad. And people who have been slow and hunkering down are now all waking up.
Are you noticing more deals coming on your platform? More?
A lot.
More
deals.
Oh, that's fantastic.
In the last 2-3 months, I feel like I'm going on vacation tomorrow, and it's been, last 2 weeks have been so crazy. Every day I have to say, okay, too good things. It's a good problem to have, but I cannot look at all of them. So probability wise, I can only get 2 of this done before the year ends. So let me choose which 2 I'll put my
attention on.
Towards. Yes.
Yeah, I just thought of something, you guys. You know the saying that people have been saying, survive until 2025. Well, I'm going to switch it to thrive after 2025.
That's nice. That's
right?
yours. Yeah, there you go. Thrive after 2025.
I love it. Awesome.
There you go. Great. Thank you so much for sharing all that information. We're excited to watch BuyProperly continuously grow. Absolutely. And get you back on the show again in a little bit to kind of hear more what you guys have done. But let's get to the second segment of our show.
All right. It's the 10 championship rounds of financial freedom. Khushboo, are you ready? I'm
getting a little nervous.
Everybody is, but they're so much fun. Okay, here we go. First question, okay? Who's been the most influential person in your life?
As most people would say, I think it was my dad in the beginning for a long time. But off late, that has switched to my mom. My mom's a lawyer and my dad's a doctor, and they're very different personalities. But now it's my mom. A lot of things I'm doing now were things she said was important, but I didn't value it till much later in my career. And so, yeah, that's my 2-part answer.
Perfect. Next question is, what is the number 1 book you'd recommend?
Psychology of Money. That's what I can think of from this year's reread. It's just a very interesting take on how different people deal with money, and how some of the things you saw as a kid growing up, circumstances determine what you think of money.
Awesome. Amazing. We'll have to get that one. Next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
I used to do a lot of things, but I think in hindsight, I would say do even more things. Try out even more things outside of your comfort zone. Just do more new, different things every year.
I love it. And we're both moms, so we can give that advice to our little ones. Perfect. Next question is, what's the best investment you've ever made?
You're not going to like me for saying this, but I bought some Ethereum long ago. This was 2015.
Okay.
Bought it for like 15 pounds. It was like really cheap. I didn't even think about it. Just threw some money, went to a meetup. They were all gung-ho. I said, fine, I'll put in $100. But it is not at 15 pounds. Long ago, it became much more. And I exited, I think like 200, 300x. It was like $100 became $2,000.
Nice.
Fun. And it was fun.
Yeah, absolutely. Nice. Okay, now what's the worst investment you've ever made, and what lessons did you learn from it?
Yes, lots of them. I'm trying to think which one is the top of radar on this one. There's a pre-construction condo that I bought. That was my first pre-construction condo. I bought that in 2010. The market was at like really low point, is looking up, like 2009 end sort of thing. It was the worst time. I had cash in my bank, straight out of school, living with parents, earning a lot of money as a consultant. It was perfect. I still haven't got that. It got delayed and delayed and delayed. That was 2010. It's been 14 years and I still haven't got the keys to that condo.
Oh, wow. Oh my God.
It's a level of delay that I had never imagined.
Yeah. Okay. Next question, Khushboo. How much would you need in the bank to retire today? What's your number?
I don't know. The number is, right now my bank is pretty empty. So I think retirement seems like a very far-fetched dream. I think more than the money, it is, I'm not the kind who would like to retire. I like doing things and I want to continue to do things and new things, and there'll be even newer opportunities as the world grows and technology grows, and there's always something that's keeping me excited. So I don't think there's a retirement horizon.
Of course, that's her answer. She's got that entrepreneurial spirit.
Yeah, well, you might be cash poor, but you're equity rich, because BuyProperly in itself is probably worth a lot of money. So
yeah, there you go.
Keep going.
Amazing.
I would like to believe that.
Yes, there you go. Perfect. Okay, next question. If you could have dinner with someone dead or alive, who would it be?
Well, I would like to have not dead, alive, with a woman called Indra Nooyi. She was the CEO of PepsiCo. She's probably closer to my mom's generation. And she did, as an immigrant coming from a conservative family, rise up to become a Fortune 500, Fortune 100 or whatever. Like, she's like the person to be as the CEO of PepsiCo. She did a lot of innovative things. Changing a large org is also a big deal. I have read her book, I've read her interviews, but I have to know, like, what is her secret sauce? What is that fire in her that allows her to change the world around her this much, and learn from her?
Interesting. Was she born in the US?
She was born in India. She moved to Yale for her MBA. Wow. She worked in BCG then, 50 years ago.
Wow.
And then rose up the ranks at PepsiCo, moved PepsiCo towards healthier snacks, which was a deviation. So she pushed for adding and acquiring more juices away from spotting the trend way before everybody else did. And so there's like a whole host of things that's basically going against the grain of society, expectations of your company, of your team, like constantly doing things that will not be happily accepted all the time, again and again. And so
interesting.
Amazing. All right. Next question. If you weren't doing what you're doing today, what would you be doing now?
Working on maybe a different idea startup.
Yeah.
Maybe something like a health and wellness thing, I would say, because I think being a founder, that's one thing I've become very cognizant of, is how important my biggest tool isn't how many hours I can put in, which was my belief for a long time. It's like, I can outwork people, I can outsmart people, but that's not how long-term sustainable things happen. For your mental and physical well-being is the biggest tool you have.
That's so true. Love that. All right. My favorite question, book smarts or street smarts?
I wish I had both. I started book smart. I'm trying to be the other one.
Nice. That's awesome. So what would you prefer?
A little bit of both.
Yeah, nice.
One is just intellect, the other is wisdom. You need a little bit of
both for success. Last question, Khushboo. If you had $1 million in cash and you had to make one investment today, what would it be?
I believe a lot in BuyProperly, honestly. I wouldn't mind putting it all back into that one. Yeah. But I think if I had one choice, I'll probably put it away for my daughter towards her education. Education is expensive and education is a powerful tool. So
absolutely.
That. Amazing. Just let the viewers know the best way that they can reach you, please.
You can reach me through my website, buyproperly.ai/.ca.com, wherever you are. And you can also reach me through LinkedIn. I'm pretty active on LinkedIn.
Wonderful.
Amazing. We'll share that in the show notes. Thank you so much for sharing your journey and about BuyProperly and answering all of our hard questions.
Yeah, we appreciate you, Khushboo. Thank you.
Thank you for having me.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.